You see, historically, as each iteration in currency comes along, it brings with it change, often increases in efficiency and simplicity. Cryptocurrency, the most recent iteration, comes loaded with many improvements over our currency system today. To understand these improvements, we need to look at the primary characteristics of money and how we've made improvements of these characteristics over time. The main characteristics of money are durability, portability, divisibility, acceptability, counterfeitability, uniformity, and limited supply. About 11,000 years ago, we would use things like cows, goats, chickens, or corn as currency. Although for the time this form of currency worked, it was also full of exchange complexities which create inefficiencies in commerce. The most notable is the classic double coincidence of wants problem. This problem arises when no other medium of exchange, such as money, exists. Now, the cow owner, looking for corn, needs to find a supplier of corn who would accept the cow as payment. But beyond the double coincidence of wants issue, the cow also lacks many other characteristics of a desirable currency. For example, although a cow is fairly durable, it could get sick or die. In terms of portability, well, it's a cow. It's not going any long distances too quickly or without any major effort. It obviously doesn't do very well in the divisibility category either. In terms of acceptability, during the time, the cow probably did okay. However, if you try to transact with a cow today, you'd probably be sent out the door. In terms of counterfeitability, the cow also does pretty well. Most vendors could easily spot a fake. Uniformity, well, not so great because they come in many different sizes, shapes, and colors. In terms of limited supply, the cow also ranks fairly well because during the time, cows wouldn't be the easiest things to mass produce, which would help ensure scarcity and therefore value. But as time passed, we would come up with better and better solutions for currency. Around 4000 BC, we began using precious metals as currency. There are finite quantities of these metals. They are more durable, they're more portable, and they're more divisible. Precious metals also help to solve the double coincidence of wants problem. Precious metals could now act as an accepted medium of exchange. So now let's fast forward to 1000 years ago. What we have is the invention of paper money. Gold and other precious metals were working well, but they were susceptible to theft and they're also heavy to carry around. So agents started popping up promising to hold and protect the owner's metals and would issue a sort of paper receipt for their deposit. These were some of the first banks. Now citizens could simply exchange their paper notes. Whoever held the certificate could go to the agent and pick up the gold or coins associated with that particular certificate. This was a very natural iteration of currency because it solved some of the characteristic flaws of metal currencies which came before it. Although it did introduce new problems with durability and counterfeitability, it helped dramatically with theft, portability, and divisibility. However, scarcity remained the same because paper money was tied to the precious metal deposit at the agent or the bank. But our society changed again, and from the 30s to the 70s, countries started feeling very restricted with their ability to control and stimulate their economies because their currency was tied to precious metals, usually gold, in a vault somewhere. But unlinking paper money from gold seemed unthinkable. What would give the paper money its value? Why would people want paper money that wasn't backed by anything? But the Great Depression forced us to make an unthinkable decision, to break the link between paper money and gold. By doing so, we could just print money out of thin air to help us kickstart the economy. During this time, government officials resigned, and others claimed that the unlinking would be the end of Western civilization as we know it. Everyone held their breath. The unlink happened and, well, it mostly worked. Economies recovered, and governments armed themselves with new monetary tools for being able to control their economies better. But being off the gold standard introduced a host of new issues, namely government overspending and inflation. The modern version of paper money as we know it today differs from its predecessor because now the money we use isn't as limited in supply. Governments can manipulate the money supply based on their current monetary policy. For example, if an economy is overheating, a government can limit money supply. On the other hand, if an economy is in recession, a government can print more money to put into circulation. So if your concern is that cryptocurrency isn't tied to anything real, that it's just an internet money, well, you can rest easy knowing that neither is what you're carrying around in your wallet or purse. It only has value because we all agree collectively that it does. So let's speed through history. We've gone through trading cows and corn to gold, paper backed by gold to paper backed by, well, nothing. And now we're at the intersection of yet another major change. because up until this point, every iteration of money hasn't been able to perfectly satisfy public need for a currency with great characteristics across the board. Depending on what country you live in, paper money mostly works, but it's far from perfect. To put it bluntly, cryptocurrency beats fiat currency on virtually every money characteristic. First, digital money is more durable. It can't rip or tear. Second, digital currency is more portable. Any quantity of money you have can fit on a cheap little phone or a USB stick. 3, digital currency is more divisible. For example, Bitcoin is divisible to 8 decimal places. Next, the topic of acceptability is a little bit muddier because fiat and crypto are currently battling it out. Technically, crypto is much better designed for acceptability because it's a permissionless and universal currency. With fiat, although spending nationally is easy, trading in an increasingly global economy isn't that easy. With crypto, on the other hand, a cryptocurrency is exactly the same regardless of what country it's being used. On the topic of counterfeitability, crypto wins. Cryptocurrency algorithms ensure that duplication of a coin is impossible. In terms of uniformity, crypto wins again. And last, crypto reintroduces limited supply as a characteristic, so it wins here as well. But most interestingly, not only does cryptocurrency win across the board regarding money characteristics, it also introduces new ones. For example, cryptocurrency can be programmable. That's a characteristic which was unthinkable in the past. Cryptocurrencies can also be linked to smart contracts and do things that we could never have done before. And now we're also getting into next generation blockchains. It's now not just about currency, it's about entirely new financial ecosystems. For example, decentralized peer-to-peer trading, decentralized apps which reward users in exchangeable cryptographic tokens for the value that they add to a platform. These are just 2 examples. I'm not even skimming the top of the iceberg here. The purpose of this tutorial is to encourage you to zoom out, because the day-to-day talk is often about price speculation or something along those lines. But it's important to take a step back and see this for what it really is, a very natural but massive advancement for what we use as money. If you found this tutorial helpful, make sure you head over to Coinist.io. Our site is dedicated to help people learn more about crypto and projects working in the space. Thanks for listening.
Anyone who has a heartbeat and has been alive for the past 12 months has known that inflation has been raging and is currently at 40-year highs. We hit a high of 9.1% year-over-year inflation in June, which is something we literally haven't seen since the early 80s. Inflation has cooled slightly from that peak in June of 9.1% to now 6.5% year-over-year inflation. Now, just to contextualize these numbers for you, the federal government likes to target about...
Have you ever wondered why some tokens are worth more than others? Where does that worth come from? What are the differences between coins that seem to do the same thing? Tokenomics is a way of looking at how a token creates and sustains its value in the blockchain ecosystem. Of course, this is a result of a ton of factors, so we're going to cover the major ones in this 2-part series. Hopefully these videos will give you some idea of what to look for when you're interested in a new project. When you're looking for information like this, remember that a project's white paper is the best place to start. If a project doesn't have a white paper or any kind of technical information available, that's a red flag. So let's get started. It's best to start at the very beginning. Where did the coin come from? Take Bitcoin, for example. Bitcoins are generated every time a block is mined, and there's a hard cap on the total number that will ever exist. This makes the coin more scarce, and as such more valuable than a coin generated from thin air. Many projects will pre-mine the sum total of all the coins that will ever be on the network, and then release them slowly over time to users. Or they'll create a large supply for a crowd sale, and then continue to generate more through mining on the network. This isn't to say that this approach is wrong or bad, but it's a more difficult route to creating value. Given 2 equally useful coins, the one with only 1 million in existence will be worth more than the one with 1 billion in existence. So this is important to keep in mind. Is the supply of the token growing or shrinking? And if so, how fast? Another factor in the value coins provide is the method in which it was created. Is it entirely new? Is it a fork of an existing coin? Is it built on top of an existing chain and coin system? All of these avenues have their benefits and drawbacks. A brand new coin has the potential to be anything. With a good team and good marketing, a lot of value can be hyped up around a project that is relatively unknown. If it can deliver on its promises, that bodes well for the value. If it can't, it has little safety net to prevent it from zeroing out. Without the community support of a fork or a chain it's being built on, it lives and dies purely on how well it can prove itself. A fork of an existing coin has the benefit of building off of an infrastructure and community that already exists. This can be good if the fork is something the community has wanted for a long time, as you'll gain a lot of users very quickly. But if it's a contentious fork, the new coin could split the community or even be actively attacked by it. These are all important considerations in a coin's value. Few people purchase a coin they dislike. Similarly, a coin built on top of an existing ecosystem like Ethereum can leverage the same community and developer support that a fork might, but without much of the risk of angering the community by splitting it. Your app simply exists on the chain and people can use it if they find it useful. But coins built on coins tend to face a lot of criticism and have a hard time decoupling or growing beyond its parent currency. You're also at the mercy of the chain that you built on. If a major change in the parent chain destroys your project, there's not much you can do. We can see now that how you generate coins and where you generate coins are important to how the market will value them. One more major facet of the valuation is what type of coins you generate. There's a lot of different types here, but we'll look at the big ones. Is the token fungible or non-fungible? Essentially, is it a currency or is it a collectible? Obviously, any given collectible can be worth much more than 1 unit of currency, but as the word collectible would imply, there's very few of them. Fungible tokens are prolific, meaning there's often millions of them. They get value from this property because you can reliably trade them with other people for a set price. A non-fungible is the exact opposite. It's rare, so its value is much higher, but at the same time, it's only really worth something to the right person. Is the token a utility or a security? Now, we won't go too deep into this here because it's incredibly complex, and we already have a guide on this that you should check out. But at the minimum, you should ask yourself this: does this token allow me to access or use a service that I couldn't otherwise? Does it perform a function? Or is it basically just a token that I'm holding in the hope that it increases in value? This is one of the many determining factors in what is and isn't a security, and the implications of that determination can have an enormous impact on the value of your token. In these early days of blockchain and cryptocurrency regulations, many users are wary of tokens that could be classified as securities, as that carries with it major legal and tax ramifications. All of this really encapsulates into a concept called network effect. All of these small decisions we've talked about, and more that we'll talk about in the next part, are little pieces of a puzzle that build up incentives and disincentives for users to participate in your network. Maybe some users are interested purely in Ethereum collectible tokens, maybe others in regulated securities based on Bitcoin forks. The amount of interested users that you capture directly relates to your network's ability to grow and expand. A network with 3 users on it is easily forgotten or compromised. A network with millions of users is much more difficult to take down, and is likely to grow further as those users talk about it. This is your network effect. In the next part, we'll discuss more factors at play in tokenomics that can help you discern for yourself why projects earn the valuations that they do. Hopefully by the end of this series, you'll not only be able to reliably spot strong projects in the space, but explain why they're strong too. See you soon. In part 1, we talked about several of the aspects of token design that impact its value. How it was built, where it was built, what type of token it is, and so on. To finish off our tokenomics discussion, we'll explore a couple of new concepts and how tokens can actually produce different types of value. So after everything from the last video is done, the token has been created and distributed in whatever form and function you desire, there are still a few more considerations in how to support the economy of the token as it grows. Token velocity is how often your tokens are moved within the network. A high token velocity often drives down the value of a token, as it is frequently being passed around and liquidated. This does not mean that a high token velocity is bad. It's just a consideration when designing a token ecosystem. If your token is primarily a means of exchange like many cryptocurrencies are, chances are the high token velocity will keep the value relatively low. People typically don't use assets worth thousands of dollars to buy coffee with. They use fast, easy, and low-risk methods. In the past, that's been a physical currency like US dollars. It's prolific and easy to use. It has a high velocity, and each unit or dollar is fairly low in value. The alternative, something with low velocity, would be a store of value like gold. Going to the coffee shop and shaving a piece off your gold bar for a coffee would not only be funny, it would be short-sighted. Gold is held onto because it's rare, it's high in value, and it tends to increase in value. It has a low velocity. So depending on how you want your token to be valued, think about how you can impact your token's velocity. If you want a high-velocity token that makes commerce fast and easy, then that's fantastic. But don't be surprised if its value ends up resting at a fairly low level. Many projects aim to lower their token velocity through concepts like staking or token burn. Staking rewards users for putting their coins in a validation pool. This takes them out of day-to-day transaction use and thus reduces the velocity. Token burn can happen a number of ways, but a popular way is to burn a tiny amount of every transaction. In this way, the supply is constantly dropping, meaning with every transaction, the coin gets a tiny bit more rare. In theory, the rarer the token, the more valuable it becomes, and so users are incentivized to hold their tokens. Another factor to consider is the overall distribution of your token. A healthy ecosystem typically has a lot of different token holders with a relatively even distribution of the supply across them. If a large percentage of your token is held by a few people, those people hold a tremendous amount of power in determining its value. If someone with 30% of your total tokens decided to begin a huge sell-off, your network's value would plummet. That amount of supply on the market would make your token effectively worthless. Try to look for ways to ensure that your token gets into as many hands as possible. A lot of this boils down to marketing and your ability to get as many people on board with your project as possible. But other methods that can help are airdropping coins to thousands of different users, or hard capping the number of coins you can buy in an ICO sale. All this being said, we can think of the overall value of each token as the sum of two main parts: its intrinsic value and its speculative value. A token's intrinsic value is gained from how well it does what it set out to do. This is tied into many of the decisions we covered earlier, like if it's a fungible token or not, if it's a utility token or not, is it building off the network effect of another blockchain? So, if you set out to make a currency, is it a currency? Does it function well as a currency? Are people using it? If so, then your token holds some intrinsic value. The system is well designed, people can see that, and so they purchase the token and use it. Speculative value is gained from people who are trying to project the future value of a project or token. This type of value is great if you're looking to make some quick money, but can be hazardous to the well-being of a network. Speculation ties into some of the decisions we made earlier as well. Like, are you burning tokens to reduce the supply and increase the demand? Have you generated all the coins that will exist from the start, or will more continue to be produced through mining? Speculative value is partially tied to a token's intrinsic value, but is also tied to economic decisions like these. If your token is inflated by speculative value, you should be prepared to see that value drop significantly when speculators begin to sell off once they get to their preferred profit range. So there you have it, our two-part crash course on tokenomics. Creating the right kind of token is an incredibly complex topic with many different nuances and decisions. We hope this guide served as a good introduction to why token valuations are what they are, and how you yourself can design effective token networks. Thanks for watching.
Well, ladies and gentlemen, good morning, and thank you so much. I am Carlos Cadiz. I am the chairman and CEO of my own business group, which means I have several businesses online, and some of those businesses are involved in cryptocurrency sales, no mining, cryptocurrency purchases, staking, cryptocurrency savings. I've been building a portfolio for the last 4 years. Now, I did try to have this streamed live on Zoom. However, we were having some technical difficulties with that, so we decided to Zoom on Facebook. And the videos you just saw are merely for educational purposes. Those videos do not belong to me. I'm sure I will have to send a notification to Facebook that I only use the video for educational purposes. Now, before I go any further, let me give you my personal disclaimer. Under no circumstances can the Cadiz Business Group or the Private Cryptocurrency Consortium be identified with a financial organization. The above named company sells cryptocurrency, third-party investment licenses, and virtual reality products. That is what we do. Let's shed a little more light on this subject. How's that, guys? Huh? Okay, let's do like we're in studio. So, acceptance of our services and products demonstrates acceptance of the risk associated with these noted instruments. Any advice requested or shared shall be solely based on the experience gathered from our participation in these markets and should not be construed as financial advice or inducement. It should be noted, past performance of any investment does not guarantee future results. All right, so with that disclaimer out of the way, let's go to where we want to be. How are we going to build a crypto portfolio for savings and why? And as the first couple of videos would show you that there is great power in cryptocurrency, okay? Fiat is dying. Most of the transactions around the world by big name companies and corporations are being done using cryptocurrency. So much so that venture capitalists have been for the last 10 years using cryptocurrency to finance major projects around the world. So why aren't you the individual building a crypto portfolio? This can change your life. One, let's take your current financial situation. It's all based around your job. Your income is derived from one source at the moment, and that is having a job. That is good because you are able to put gas, pay the lights, pay the electrics, put food on the table, things that the kids need, wife, husband, personal needs. But of course, it can only take you to a certain height. What you are looking to do is create wealth. And how are you going to do that? You need to use the new form of wealth. If you haven't understood yet, cryptocurrency, the whole design behind Bitcoin was for the common man to have a financial footing. This was not given to any financial institution globally. It wasn't given to any governments around the world. It was put simply in the hands of the regular Joe, that's you and I, so that we can have an edge in terms of the way the world of finance is going, and gives us an opportunity to be able to build generational wealth. And I don't use generational wealth lightly. People, it is your responsibility before you die to have in place an effective plan that ensures the financial sustainability of your family, of your generations. It is incumbent upon you to do so. Yes, that pause was for dramatic effect. It is incumbent upon you to do so. And in today's world, with the great advancements in technology, I mind you, cryptocurrency is entering its 20th year, right? And you still don't have any yet. But with this age of advanced technology, it creates a level playing field for you to be able to plan a financial future, to be able to decide and plan a full family vacation without worrying about the expense or the cost or having to cut it short. You can only go for a week instead of going for 3 weeks. You could only go for 2 weeks instead of going for a month. Or you may be able to go for 3 weeks, barely, instead of going for 3 months. What if you could wake up in a different city every quarter of the year? So for the year, at least, you're spending 3 months in a different city around the world. You can only do that if you have the financial freedom to do that. And I assure you, cryptocurrency can do that. Now, this is a university on one of my platforms that I use. And this platform has made it so easy for me to be able to build a savings portfolio. I learned things like you heard earlier on, staking, which means, okay, I buy a certain number of coins, and I particularly bought Tron coins, and on my platform here, I have them staked. So it's like if you were to take $15,000 and put it on a fixed deposit, but I guarantee you this, I am earning 3% per day on the growth of that crypto. Your fixed deposits, and I'll give you an example of one of my clients who I turned into a crypto savings client, had $20,000 in a popular bank for 9 years and was supposed to receive 5.5% interest on that. When we met and I started to talk about cryptocurrency and introducing her to this, she says, well, listen, now that sounds good. She says, but let me see what my fixed deposit has done for me, and we will compare. And folks, I will tell you this. When she was told that after that period of time, for 20,000 US dollars was only valued at 0.0000050 zeros after the point, 2, 1, something, something. She cried. She cried. And then we had a deeper discussion on cryptocurrency. She closed that fixed deposit after 9 years, brought that 20,000 US dollars to me. Within 8 days, I presented her with a cryptocurrency portfolio. It is now 2 years later. That cryptocurrency portfolio 2 years later with the same 20,000 US dollars is now worth just around 62,000 US dollars. So cryptocurrency does have a greater value than fiat money. It is not subject to recession. Cryptocurrency is not subject to manipulation. You cannot manipulate the blockchain. You can corrupt fiat to any degree. You cannot corrupt cryptocurrency because of the algorithms that drive the blockchains. Let me just say as you know, as they say, as layman as I can say. All right? So you have no worry there. Cryptocurrency also means P2P, peer-to-peer. That's the transactions are between you and I direct. I can buy your home from you for any amount of money you call without the middleman, the real estate agent, the banks, and who else wants to broker. I just need to know that the most I would do is get the clearance and ensure the title is free. I pay you within 30 seconds or less, and you move out. That is how cryptocurrency business is done. That is how peer-to-peer transactions are done. It doesn't matter what you want to buy. If the flower shop down your street is accepting cryptocurrency of any kind, you walk into that store, you order your arrangement of flowers, and you just swipe your phone, and that transaction is done in a matter of milliseconds. And based on what I told you was the interest on that 20,000, the fee for a cryptocurrency transaction is 0.00005. That is how low it is. And funny enough, it was higher than the interest she had in after 9 years on 20,000 or so. But cryptocurrency is smooth transactions, right? If you've never been involved in cryptocurrency, or you had fears of cryptocurrency, or you listen to the doom and gloom and naysayers, you do not listen to the people that are spouting the nonsense and negativity out of their mouths. You are an intellectual individual. Get up on your system, Google search. Anything you want to know is available there to you. You could even ask Siri and get the information you want, and then begin to educate yourself. The biggest downfall and the worst sin you could commit upon yourself is not to self-educate. I run all my companies, but every day, because of all these screens, every day from 10 a.m., my clock goes off, self-educate till 12 noon. And just to put in a little quick one here, the beauty of working from home or anywhere with technology, screen here, screens up there, wherever I go, there's a screen in my car. I'm always live, always online, doesn't matter where I am. 5 minutes before I started this session, while the videos were going on, I had bread baking in the oven. But I am the chairman and CEO of 7 online companies. So you see, I don't have the headache of the employees and the staff and the building and the and all the headaches with the paying for the rent and the land, and no. So I'm employing you, pay more attention to what's available to you online. So we're talking crypto. And how can you build a portfolio with crypto? First, let me say this for you. If you're new to crypto, figuring out how to join the crypto world and obtain digital assets could be very confusing at first glance. Believe you me, it was to me. The crypto industry offers numerous ways to take advantage of cryptocurrencies and multiple giveaways for crypto investments. But let's leave that to the side. The things I want you to bear in mind is that you can save crypto the same way you are saving money in that savings account in your bank down the road right now, and you are getting zip. 3% a day on crypto savings is exactly that. Why? Because these coins are being traded 24/7, 5 days a week. So, and with automated trading using algorithm robots, you are guaranteed of earnings. Guaranteed of earnings. Whether it is 10 cents or $10,000, you are guaranteed of earnings because it's all automatic trading bots. You are not doing this yourself, right? Now, and you're not actually going into trading, because that's not what I'm talking about here. I'm talking about you just being able to download an electronic wallet that no one can break into. Your banks have been compromised continuously, but the wallet on your phone cannot be broken into. Type of protocols of that. You need to know what are the best platforms to use, what's the most popular, how you create an account, how you fund an account, how you make a purchase, where you store your cryptos, the different ways in which you buy cryptos. Now, there are cryptocurrency ATMs around the world. You will not find them here in the Caribbean, all right? You have crypto brokerages, peer-to-peer platforms, all right? Everything from BitPay to Binance to CX.io, there are lots of them, right? Ways to obtain crypto without investments. The faucets, which means there are streams of which you'll be directed to. Airdrops and giveaways, because when new coins are being minted, the developers will do things like airdrops and stuff to get coins. There's so many different things that they do. You'll find affiliate and bounty programs, which means that simply you will be making money on things that you never expected just from having a cryptocurrency wallet on your phone or on your desktop or on your laptop or on your tablet, building a portfolio, and then using the programs inside, because these platforms will teach you everything you need to know. Take your head out the clouds. You went to school to get an education, to get a job. You did not go to school to get an education, to know how to buy crypto, to know how to invest, to know how to save, to know how to build big businesses. Tying my tongue up there because there's a sore spot for me. You were simply taught to serve someone else with big business, but you were never taught to own a business, run a business, develop, engineer. So let's come here. So these platforms will teach you. Knowledge is power, people. And regardless to your age, because I have 70-year-olds in my team. The eldest on my team, I think, is 80. And they are retooling themselves. So any of you young ones making all the excuses and you think the only thing important right now is to party, have fun, and have a good time, that will come to an end, and you'll find yourself a 50-year-old that's broken financially, and you'll actually be broken mentally too. So these are the things that you will need to know, right? However, when it comes to becoming a crypto investor, purchasing crypto can be considered the most common way. So just buy coins, okay? You don't need to sit down and try to dabble in the market. Just buy the coins. However, before buying crypto enthusiasts may want to do their own research, as I said before, to select the appropriate assets and analyze whether or not it can be a good time to enter the crypto market, okay? Now, once you decide what you want to do, follow rules. There are rules to everything. You have code of conduct on your job. You have code of conduct in sports. You have code of conduct in Cub Scouts, okay? You have code of conduct from primary school. You have a code of conduct in your home. Those are rules. There's a code of conduct in building wealth. Do not deviate from that code. Okay, one, let's talk about selecting the platform for crypto purchase. And I will guide you through, because in case I didn't mention it before, this is the first of a series. I am continuing this because I intend to bring the value of cryptocurrency to the Caribbean people. You need to understand that you are missing out. The wider community, oh, they're doing exactly what you are not doing. And I'll also add here, before I go into number one, as chairman of the PCC, which is the Private Cryptocurrency Consortium, February 19th, we're going to be celebrating 4 years, and we have a competition on with our teams right now. We are 73 customers short of 500. 500 customers. And at that time, when I started the Private Cryptocurrency Consortium, your investment to build a portfolio for your family was 20,000 euros. And I'm 73 customers short of 500. That is how valuable cryptocurrency is to people who know and want to know. And they've built portfolios that if they were to drop down dead now, their children children's children would never be without money. So let's go. Selecting the perfect platform. Now, there are a lot of different platforms that offer a lot of different services to purchase crypto. However, centralized crypto exchanges are typically viewed as the most popular option. Yes, that's what I use, a centralized exchange. This is because centralized crypto exchanges empowers users to purchase crypto using fiat. So you can take a credit card, a debit card, and you can buy crypto as a start. It wasn't this easy before. It was very difficult, right? Now, unlike the centralized exchanges, which is the DXs, they may provide access to multiple crypto services in one place. Whereas with the others, you have to have a DX wallet for this one for that one. So one for Bitcoin, one for Ethereum, one for USD, one for USDT, one for Chax, one for Cardano, one for Shim. Whereas with the centralized exchange, one platform handles every cryptocurrency on the market. Actually, it is the same platform of which I'm using this information here, because I'm also the chairman of Network University TNT. That's my online YouTube channel to which these are going to be loaded. I teach. It's all free. Come and learn to get wealthy. So when you're choosing the exchange, pay attention to the reputation of that exchange, all right? And availability in your country. And this platform that I use, its transaction is seamless, because why you want to make sure it is available in your country, you want to be able, when you're withdrawing your funds, you can send it to your debit card, your credit card, or wire it to your account. Once you go in debit card, credit card, or wire into your account, it's coming in cash. And wire transfers are not questioned because it's easily traceable. It leaves a proper paper trail, right? If you want it in cryptocurrency, that's when you're going to send it to your personal wallet on your phone or whatever device you're using, right? Now, if you're trading, same thing. Then with the trading, you're going to actually have a broker. You must be verified. Don't think it's just like that. You have to verify who you are, part of the world you are. So it's like utility bills, passports, that kind of thing. A verification is simple. And always make sure you have a two-factor authentication app on your phone. That way, there is no chance of anybody slipping in between your transactions. And blockchain transactions, once you make it, you can't change it. And that's the beauty of it. That's why you can't corrupt it. So 2, creating an account. Once you decide to create your account, you register with whichever platform you feel most comfortable with. You go through the process, the verification process, and then you'll have access to the services, all your payment options. You'll know what your account limits are. Like, for example, on this one here, I have up to 50,000 US a day I can transact, right? There are other accounts where you can transact much more than that. And again, it depends on your capacity, because there are people here who might start with at $25, and depending on the coin they buy, and I'm going to make sure and show you the various coins and prices so you have an idea, all right? But you create your account, you meet the regulatory requirements to prevent fraud and secure your trading environment. Boom, you're inside. And then funding your account, right? Once you're verified, your personal information is, you'll see it on your platform that you are verified. They'll send you emails, and let me tell you something, the communication between these platforms and you are seamless, and they keep you abreast of everything that's going on your account. That's right. So funding, you'll use either credit or debit card, and you pick whatever coin you want. And from there, that's it. I'll come to your wallet. Show you that. I'm not sure I'll be able to see my wallet on the phone, but we'll do it here. Go on here. So making a crypto purchase. I also actually have, this is the newest wallet I have. I'm using this wallet actually just to fund investments in the same licenses I sell, because as you see on a disclaimer, we sell third-party investments licenses. So for example, let's say you wanted to buy an investment license. You simply, if it costs you $25, $100, or $50,000, you are literally renting a license that comes with an automatic trading robot and you have 12 months for that license to make money for you. And all that license costs you for the 12 months is either $25 US, or you decided I go in big, you put 50,000 US. That's how cool this is, all right? And that's how you build in wealth. So making crypto purchases and funding your account and stuff, that's not hard. You know why? You all have been shopping on Amazon and eBay and all the other sites. Same process. You fill out your information, you put your card of choice there for when you make your purchases. Your account is secure, your account is verified. It's no biggie, right? Deciding where to store your purchased crypto. When you execute your orders, you could have the balance sent to your crypto exchange or sent to your wallet, right? You could decide where you want to store it. And your wallets are so secure, like I say, even if you lose the phone, you have things like backup seed to recover your wallet. You write down those 12 random numbers, you store it in a safe place. So you buy a new phone, you go, you re-download the app, it says, okay, recover wallet. You put in your 12 seed words, boom, there's your wallet and all your money. If you can't do that, you'll never get your money. You can have $50 million on this phone. If you don't have your backup seed where you can recover your wallet, nobody in the world can help you. And there's a unique story with that. A guy lost his backup seed. It was all over Facebook. And listen, everybody was trying to give this guy solutions, just wasn't working. He had $10 million in Bitcoin and could not recover that wallet. But he eventually did. He found it. After about 14 months, young man dug his house up. We followed that, so it was amazing. But that's how important. See, if you can't get it, it means nobody can get it. They're walking around rich, but you just said you can't spend it. All right? So you have all of that available to you on your site. Again, the education is important. Self-educate. Listen, give yourself an hour out of the day. After you woke up at 4:30 a.m. this morning to prepare to go and labor for someone else, you're leaving home and it's dark, you're coming back home and it's dark. When are you going to have time for yourself? Carve out an hour for yourself. Carve it out. You deserve it, okay? Carve it out and retool yourself. Now you have also things like hot wallets and cold wallets. You have things like own custodial and non-custodial wallets, but there's a lot of jargon you don't need to know. All you need to know, you go up online, you download a wallet. As a matter of fact, I would say to you guys, and I'll try and put it in the chat, put a link there, so you guys could actually go up on this site, get a proper wallet. Because let me tell you this, when you download it to your app, to your phone, that's when it becomes your phone wallet. When it's on your desktop or your tablet or all that, it's actually your bank. Because you have your savings, you have your stakings, which is your fixed deposit. You have all the currencies that are available to you. You can look at all the currencies as they trade. I'm going to show you all that exciting stuff, right? And of course, there are always alternative ways to buy crypto. All those centralized crypto exchanges are the most popular. You know, you could buy through ATMs, depending on the country you live in. You put cash in, and out comes a slip with a code on it. You scan that code with your phone, you open your wallet, press receive, scan that code, and that coin goes straight to your phone. So now your wallet is loaded. There are many ways, right? Brokerages, they do loans. For example, when I found this out, I found staking was so exciting. So now I have 1,500 Tron coins on staking. It is now, give or take, 4.5 days since I did that, and I'm already up 86 cents on my 1,500 something coins that I got. For 1,551 coins, I got for $100 US. And the longer I leave that there. So imagine this. Let me paint a picture here for you. Your child is 5 years old. You're as smart as I am. Here's what you're going to do. You take $500 US, you buy Tron coins, that gives you, because the more expensive you buy Bitcoin, you'll get less. So Tron is the tether for USDT. It's pegged to the US dollar, just like USDC. So you buy USDT or USDC, you buy 500, you probably get about 489 coins. And you put them in They are in your bank now on your desktop, right? You go to finance, and I'm gonna show you it, but I just need to tell you. You click your savings button, that's all. So that earning 3% because just like how you have a savings account in your bank. And on staking, they click that button, oh, it's earning 3% every time the value go on every day, every day, every day, every day, every day. So your 5-year-old child is now 20. Catch my drift. Peer-to-peer, like I said, those platforms where we use our wallets and I can send any amount to you, send any amount to me, I can buy anything from you, can buy anything from me. And then the decentralized exchanges, which are like our centralized exchanges. Exchanges exist only on the chain. This is empowering users to exchange cryptocurrency directly with each other. Typically, DEXs don't require users to complete verification, which is dangerous. I prefer to be verified. I prefer to know the person I'm sending to, that person is verified, because I don't want to send my money to a terrorist now, do I? Right? And ways of being crypto without investment, as we said, you can buy directly from for yourself, right? Coins, tokens, and understand. Cryptocurrency is considered a fungible. NFTs are non-fungible tokens. In other words, that you're not trading that or anything, you're buying that and just keeping that. That value will go up based on whatever. But with crypto, as a fungible, that's traded. So that has a fluctuation in value from high to low, but that's where we make money. The fungibles is like buying a Mona Lisa and putting down there or a Rembrandt, and the value will just increase the longer you have it. Right? Process are known as one of the oldest ways to obtain crypto. Right? First one was created in 2010. So I've never heard of Faucets, right? And give away 5 Bitcoins to each new visit. Oh, that's what it means. So I visit your website. If I'm visiting your website, you give me 5 Bitcoin. Now, if I had known this 20 years ago, when I saw Bitcoin, folks, I saw Bitcoin at $7, and because of ignorance at that time, I always say, being a Caribbean person, we never thought about investments and trading and all that, and seeing ticker tapes on Wall Street. So I saw Bitcoin at $7, and here's me. Who can't pay $7 for a coin? These people are real crazy, they have nothing better to do. And I moved on. And then I came across iMarkets Live, I joined that, and then I saw Bitcoin was $15,000. And I was like, you idiot. But you know, I didn't go too hard on myself. I didn't know, now I know. I never made that mistake again. I'm heavily steeped in the cryptocurrency. My portfolios are nice. You can't make the same mistake. You see, when you know, and you know, confidence replaces fear. Yep. And that's why I'm here doing this for the last 4 years, teaching people. So, airdrops and giveaways. Thousands of crypto projects in the industry, because currently right now in the market, you probably have about 20,000 coins available. And people keep mining new coins because it is a lucrative market. Understand this. 30 years from now, 50 years from now, some of us wouldn't be here from now, 100 years from now, when cars are like hovercraft, just like you saw in Fifth Element. You watch these movies and feel it's not coming. They've been showing you Bitcoin for years. They've been showing you all the different technological advancement. And you're just going, oh, great movie. That's ignorance, right? But this is how money is going to be spent and generated. You think our kids could be doing? A whole different world, okay? And let me add this part. The affiliate programs is that, listen, taking part in the affiliate programs, if you want to promote the company and all that, they will pay you commissions for that, okay? I always say there's only money on the table. Tips and payments in crypto on different forums and social media platforms. Crypto enthusiasts may receive tips in crypto from the communities. Yes, join the communities, ask questions. In money and finance, there's no super question, right? So these are just like social media platforms, okay? It can help you. And not only that, these tips are sent using the so-called crypto tipping bots. Again, algorithms are played. So if you really want to get into this, yo, regardless of what way you decide to obtain your cryptocurrency, choose one. Do something. Make sure that your current actions in cryptocurrency market comply with your investment goals. Keep in mind that cryptocurrency can be extremely volatile. Okay? Remember that? Disclaimer. Risk associated with it. But what you're doing, I am encouraging my investors to buy and hoard I'm also available for public and private consultations. All right, you guys, you can always get me on WhatsApp at 7, well, actually, let me get the international. It's actually, okay, I'll write it in the chat. So here's the number. So you're looking at 1-868 office 610-3948, cell 714-7854. So you can actually WhatsApp me, all right? And we could talk. There was something I wanted to put in there for you too. Okay, I'll get back to that. So guys, this is introduction 1, right? So let me jump back here and show you some stuff I was talking about now in terms of actual savings account, okay? So, let's go here. Let's do earn. Watch this. So this is one of the accounts. I started this one a couple of days ago because I have so much stuff on automation that I actually have close to $75,000 just spread across and being automatically traded for me. So I started a new platform called Mainnet. Ooh, sweet! And that's how I got this platform here, right? So let me show you something. So I'm in savings, right? So if this was your bank account, whatever bank you have, and your savings account, you have $51 in it. And this one, you have $14 in it. This is USTD, because like I said, they're pegged to the US dollar, right? This is an in 3% every day. This is an in 3% every day in my savings account. Even if I use it. Don't care how many coins are in these accounts, it's earning. It could be 1 coin, 3%. Because I use the USDT regularly because I keep buying investment license. I'm upping my game in terms of my investments. So I was testing the Mainnet platform. I started with a $25 license. The automatic algorithmic robot started trading that for me. And I was like, well, in 3 days, I don't make $2.69. I said, okay. I added a $50 and $100. And I realized, hey, shucks, I'm booked for a trip. I need money to do this and I have money tied up here. So I started to pull money from the various commission platforms. I'm going to make sure that account by the end of, if not February, mid-March, has 5,000 sitting on it. Trade that for me, baby. Because 5,000 in 12 months will give me roughly, give or take, probably about $62,000 US return. So yeah, right? And I'm going to be buying more coins on this, adding it up here. So my savings account at any given time, not earning interest, I'm beating your bank by a mile here already because there's US. Okay, hold on. And what I did is myself staking. So here's my fixed deposit. So here's my savings account. Here's my fixed deposit account. And you compare it to yours. Be real with you. Whoa, look at this, guys. Remember I told you it was these 9 cents? I bought these coins. It's sitting down here. And every day I'm earning 3% on it. So now in 4.5 days, I've earned $1.27 just for holding it. So what's going to happen for the next, how much here? 354 days a year, 360, no, 301. 45 days of the year. How much do you think that will be? Understand the power of cryptocurrency and why you should start now. Why you should build a portfolio cryptocurrency. I can transfer this from here to anywhere. All right. I can buy more. I can redeem this dollar right now if I wanted to, but why would I do that? I'm not a hustler building wealth. All right. So you understand these are the coins that are on the market that you can stake, carve up. You're getting 12% a day. Ontology, 13% a day. AVAX. But bear in mind, the higher the percentage, the more expensive the coin. Zilla is about $65 for 1 coin. So you see the 10% of that. So that's why I went with Tron. I'll take that 3% because each of these coins cost me about $1. Let me show you this. Let me show you this. We ain't done yet. Okay, so let's go spot trading. This is what the centralized platforms have in store for you. It will change your game, right? At any given time, you know what is happening with each coin on the market, their growth. You may not be the one to read charts, but just for example, on the 6th of February, this is where we are with Bitcoin, $22,957 for one. It had a low of 22,929. It had a high of 22,957. You do the math between 957 and 929, and you know how much it went up by. Because you're not into charts, and as on a 15-minute chart, what does it look like on a 1-hour chart? You see, this is where automatic trading and using algorithmic robots work for you. So while you're sleeping, them guys working. All right, them guys working. Let me get see if I can get a quick view of that here. Show you how what's going on with this bot here. All right, so I can jump in and back office here quick. I'll show you that my automatic trading bot is doing his job while I'm talking to you. This is how you want to build wealth. You see, you have a job as well in networking and that. I ain't going to show all that. I ain't letting you see all that. Right? So I bought from July. This was a profit, 8.52%. August, 10.9. September, 10.16. October, December, November. Because I still trade on my MetaTrader platform every day. Once I make $500 for the day before lunchtime, I don't care what happens to the rest of the day, work it in. December, which I traded in. I'm surprised that they did so well in January because the first 2 weeks of January, I lost so much money, I almost cried. February is now being built up. You'll notice my bot eyes are green every Sunday until 11 p.m. Activate your trading bot. So the monies I have on this account is being traded by this little guy here. And I have all my licenses here and they're running for 365 days and all that stuff. But that's not the stuff. Okay. No. Oh, here. Go back here. All right, that's one account. And another thing, people, when you're doing business online like this, you can have any amount of accounts you want. You can build this thing out. Listen to me. How I do it, when I build portfolios, I don't build portfolios for individuals, unless you're single, male or female. I build portfolios for families. So I build a portfolio starting with the husband, then the wife, and then the children. That's a tripod, triangle, pyramid. I don't give a damn what you call it. You're an idiot if you don't understand your government, church, and school is a pyramid, right? The value here is in building your family. So this tripod, there are licenses in here working on automatic for 12 months. All that income comes to one family. The savings they can now enjoy, the vacations they can now take, okay? The better home, clothes, they can eat better. A man can take his wife out to dine and not have to look at the price first and then look at the menu after. But his wife can dine in luxury and mental comfort. And she don't have to wash her hands after she eat that food. Catch my drift. That you can spend every waking day with your family because money is not an issue. That is why you need to build a cryptocurrency portfolio. Your bank cannot do it for you. Let me show you this. I'm so bold. I'm putting my link in the chat for you guys. I'm saying to you, I want you to get up here, get this license, register this online bank. This is yours. You come to my classes, I will teach you a world of things. You will be able to change your financial future. Finance, jump in here. This is your bank account. This is what your bank will never show you. They will never show you your money. They can't show you your money. Your money is not in the bank. A bank only holds a certain amount of money for day-to-day transactions, but the millions of dollars is outside on the Forex market being traded, people. Your money. And you get nothing at the end of the year when they declare their profits. 9, 10, this was long. So I'll end just by showing you this. All right, where my coins are. All right. USDT. Yeah, see the same 14 USDC. I can add, send, I can do anything. And I close with this instant buy. We just went through this, right? Ways to buy cryptocurrency with Visa or MasterCard in any of these currencies and any coin you want. And we'll guide you through. I'm willing to guide you through. Buy Tron. If you have the money to buy Bitcoin, go right ahead. But really and truly, no, that's just your granddaddy. So buy, okay, let's say Carver. You want to know the price of it? Okay, let's say you want to buy $25. Okay, realize you get 23 coins for that. So this is just under $1 per coin. Easy math. All right, you click buy. All my credit card information is there, but I don't really need to buy anything. So I'll be back here on Wednesday. This is the first, so it did take a little longer, but I'm quite happy to have done this and to be able to share the value of cryptocurrency, both from a trading standpoint and from just buying cryptocurrency and hoarding it for the future. So, ladies and gentlemen, thank you so much. I look forward to seeing you again on the next one. I am Carlos Cadiz. I have been your host. You have been most gracious. And on Wednesday, I'm going to be back here. Since I'm having problems with the LinkedIn stream, I'm going to continue with the Facebook live stream. I'm good to go with that. So for now, have a great day. Remember, make every action a money-making action. And every day, try to create a better version of yourself.